Welcome to the I Love Winnipeg Real Estate Podcast, your premier resource for buying, owning, and investing in Winnipeg's real estate market. And now, here's your host, Adrian Schultz, who loves all things real estate, property management, and mortgage financing.
On today's episode of the I Love Winnipeg Real Estate Podcast, I'd like to speak with you about credit and mortgage financing. First, let's talk about credit. The ability of a customer to obtain goods and services before payment, based on the trust that you will make payments in the future. When you borrow money to buy a property, you'll be required to prove that you have a good history of managing your credit. That is, making good on all your payments. But what exactly is a good history of managing credit? What are lenders looking at when they assess your credit report? If you're new to managing your credit, an easy way to remember the minimum credit requirements for mortgage financing is the 2-2-2 rule. 2 active trade lines established over a minimum of 2 years with a minimum limit of $2,000. That is what lenders are looking for. A trade line could be a credit card, an installment loan, a car loan, or a line of credit. Basically, anytime a lender extends credit to you, your repayment history is kept on your credit report and generates a credit score. For a trade line to be considered active, you must have used it for at least 1 month and then once every 3 months. To build a good credit history, both of your trade lines need to be used for at least 2 years. This history gives the lender confidence that you've established good credit habits over a decent length of time. $2,000 is the bare minimum limit required on your trade lines. So, if you have a credit card with a $1,000 limit and a line of credit with a $2,500 limit, you would still be okay as your limit would be $3,500. If you're managing your credit well, chances are you'll be offered a limit increase. It's a good idea to take it. Mortgage lenders want to know that you can handle borrowing money. Now, don't confuse the limit with the balance. You don't have to carry a balance on your trade lines for them to be considered active. To build credit, it's best to use your trade lines, but pay them off in full every month in the case of credit cards, and make all your loan payments on time. A great way to use your credit is to pay your bills via direct withdrawal from your credit card and then set up a regular transfer from your bank account to pay off the credit card in full every month. Automation becomes your best friend. Just make sure that you keep on top of your banking to ensure everything works as it should. Now, you might be thinking, what about my credit score? Isn't that important when talking about building credit profile to secure a mortgage? Well, your credit score is important, but if you have 2 trade lines reporting for 2 years with a minimum limit of $2,000 without missing any payments, your credit score will take care of itself, and you should have no worries. With that said, it never hurts to take a look at your credit every once in a while to ensure that there are no errors reported on your credit bureau. So, if you're thinking about buying a property in the next couple of years and want to make sure that you have good enough credit to qualify, let's talk. Connect anytime. It would be a pleasure to work with you and help you understand better how your credit impacts mortgage qualification. Thank you.
Thanks for listening to the I Love Winnipeg Real Estate Podcast. If you like this episode, please subscribe and give us a rating, which will help us reach more listeners. Until next time, connect with us on social media and online at ilovewinnipegrealestate.ca.